afternoon from Bangkok. Welcome to Minor International's investor presentation for the third quarter of 2011 performance. Today we have two executives conducting the presentation. First, Mr. Chayapat Paitoon, Vice President of Strategic Planning. Second, Mrs. Juthatip Adunpan, Investor Relations Director. We'll begin the presentation with performance review for the third quarter and the first 9 months of 2011, followed by business updates and outlook, and finish with summary of impact from flood. After the presentation, there will be a Q&A session where you can submit your questions online. And now I would like to pass it on to our management to conduct the presentation. Thank you.
We would like to start off with the results review. I understand that every one of you probably had a chance to look at our results, which were released last week, and then the MD&A that we posted on the website. But just want to recap very quickly on the results. In the 9 months of 2011, revenue increased by 52% year-on-year as a result of a combination of a lot of things. First is the gain on fair value adjustment of our investment in S&P, roughly about 1 billion baht. And then we consolidated Oaks onto our financials. This quarter, in the third quarter, is the first quarter that we have a full consolidation of Oaks. We start consolidation of Oaks in June 2011, but that was only 1 month in the second quarter, but this third quarter will be the full quarter. And next one is the revenue from real estate development, which is a combination of revenue from residential projects as well as revenue from timeshare. If you look at our financial, we lump these two together in one item. Lastly, the strong performance of all of our business units, food, restaurants, and retail doing quite well. So that's why we saw such a strong growth in revenue. Moving on to EBITDA, pretty much the same reasons why we saw EBITDA growing quite strongly by 88% in the first 9 months of 2011. This includes gain on investment in S&P, as I mentioned earlier. But even if we strip out the gain on investment in S&P, we would have seen EBITDA still growing by 47% year-on-year. Lastly, in terms of net profit, we saw net profit rose by almost 200% year-on-year if we include the effect of gain on investment in S&P. But if we strip that out, it's as high as 68% year-on-year in the first 9 months of 2011 on the back of the performance of St. Regis residential sales, consolidation of Oaks, despite the higher expenses that we have to carry on from the two newly opened hotels, St. Regis and Kihava, which we're going to explain a little bit more in later slides. So let's move on to performance by business units and as well as business update and key development. Start out with restaurant business. Restaurants still growing quite strongly. Profit growing by 6% year-on-year in the first 9 months of 2011. But you have to bear in mind that in the third quarter, we recorded impairment of investment in China of about 93 million baht. So if we strip that out, which we consider non-recurring, we would have seen a profit of food group growing even more strongly. If you look at brands, same-store sales growth, most of the brands exhibited such a strong same-store sales growth and positive same-store sales growth in the third quarter as a result of higher revenue per customer and also the number of customers. And together with the expansion that we have, we also continue to put our emphasis on the expanding outlets, both inside Thailand and outside Thailand. And also, we want to highlight that we continue to growing outside Thailand. This quarter, we opened the first franchise outlet of Swenson's in the Philippines, also the first franchise outlet of the Coffee Club in China, and the first franchise Thai Express outlet in Korea. Let's look at the restaurant statistics. Like I said earlier, we still see strong same-store sales growth. If we date back at the beginning of the year, we target that we're probably going to see same-store sales growth tracking economic conditions growth, which should hover around 4% or 5%. In line with the GDP forecasts on the street. But it turns out that in the first quarter, second quarter, and third quarter, we saw much stronger same-store sales growth than that level. First quarter, we saw 8% same-store sales growth, second quarter 12%, and third quarter 10%. But on average, over 9 months, 2011, we saw same-store sales growth as high as 10% year on year. And if we look at Thailand only, in the first 9 months 2011, same-store sales is as high as 13%. On top of this same-store sales growth, like I said, we continue to put our effort in terms of expanding our outlets. So we saw outlets expanding from 1,169 at the end of second quarter to 1,204 at the end of third quarter 2011. And we have an aspiration to double the number of outlets to more than 2,700 outlets by the end of 2016, according to our 5-year plan. And also, we would like to expand our outlets not only inside and outside Thailand, but at the same time, we would do it on both equity outlets and franchise outlets as well, as shown in the slide. Let's look at the update on the food costs, something that we have been showing analysts and investors all along, that we managed to curtail and contain food costs at manageable level. This quarter, it further declined to about 31.8%. In the third quarter. So the trend over the past few years has been showing the declining trend. So we continue to use the fixed long-term contract prices, not just to secure pricing, but also secure supply. And then we have the dedicated supply chain management to do the sourcing of raw materials or ingredients at reasonable prices, as well as the ability of us to pass on some inflation to consumers. So the combination of these strategies will help us manage cost, especially during the flooding situation that we are having right now, and even after flood situation. People talk about inflationary pressure, but we think and we hope that our strategy would be able to help us contain the costs at this level going forward. Let's look a little bit on the food brand that we acquired in 2008, the progress of it. First, Thai Express, something that we acquired in 2008. The general trend, it's improving in terms of same-store sales growth, but over the past few months or few quarters, same-store sales growth still blip up and down in positive and negative territory. It hasn't started to stabilize as yet. This is something that we're still working on right now. We acquired in 2008, and at the beginning, right after the acquisition, there might be a little bit of overexpansion of Thai Express. So we're now looking to rationalize the outlets, i.e. reduce some of the overcrowded outlets and non-performing outlets. And also we try to convert some of the sub-brands of Thai Express, which not performing well in one particular location, to the one that perform better in that particular location. You're probably well aware that Thai Express has some sub-brands under it. For example, Sinwang Hong Kong Cafe, New York, Shokudo, Buffet Town, and some other smaller brands under